Hello, everyone. This is Travis the Trader coming back to you live on Tuesday. This is September the 24th. Many of you have asked me about the Nasdaq futures. How do you trade them? What are some of the strategies? What are some of the investment vehicles that are used in order to obtain exposure to the Nasdaq markets? One of the ways to go about doing that is /NQ. NQ, I would call it the big boy trade. And again, I would love to get people's comments on this, as well as, of course, a like and please subscribe so that I have the algos, the YouTube algos on my side as well, so that I can continue to deliver good quality content to you guys. But coming back here for 1 second, /NQ, people view it as a big boy trade because one contract is 20 times the Nasdaq 100 index. So you're looking at about close to $400,000 of notional value that you're controlling, that you control if you decide to put on a trade in the /NQ. And I just wanted to point something out just to show you how big these trades can be. If we go down to the 19,000 strike price, you have a 23 delta. So you're getting about let's just say $4,900 of credit. You're putting up close to $15,000. That's a lot of money if you're just in a standard retail account. If you wanted to reduce that buying power exposure, there's something called the micro Nasdaq futures. That's /MNQ. These are the micro, as I said, the micros, where if we went to the same strike price, the 19,000 strike at a 23 delta, getting about close to $500 of credits, and you're only putting up about $1,500 of buying power. So again, fantastic return on capital. But what I wanted to point out to you is that it's 1/10 the size. For those of you who might feel a bit overwhelmed of the size factor with /NQ, there are micro Nasdaq futures. Now, some of you may not feel comfortable with futures at all. And the great thing about the Nasdaq 100 is that there is an ETF, that comprises of the Nasdaq 100. And here there's really no 23. So I'll just use the 24 delta. So at 460 strike. So you're getting 584, but here you're putting up about $7,200. So you have pros and cons to all of these different products. And I would say the pros in using futures, /NQ, /MNQ, is that you're using, the futures are more cost efficient. In this case, I would actually consider using MNQ because you're not putting up as much on the /NQ and clearly not as much as the Qs, where you're putting up 7,200 for the same delta. And the credit is about the same. But at the same time, I'm always want to be as efficient as possible with the amounts of money that I put into every trade. The other risk that you have with the Qs, unlike with futures, is that the Qs you have to be concerned with dividend risk, unlike futures where there is no dividend there. But I will discuss more of that in a later video. The goal of this video was just to give you an idea of some of the different investment vehicles that are used when trading the Nasdaq 100. If you did find value in this, please, I hope you would subscribe. Please give me a thumbs up. Love to get your thoughts. Love to get your comments on this. And of course, I look forward to seeing everyone at the next video.